Hey, accredited investors, I'm excited to announce that we have a new deal right now. It's a 78 unit building, 5 minutes from the Kentucky Derby. Its rents are presently 20% below market for renovated units. To learn more, all you need to do is go to homeinvest.com or click in the description below. Always consult with a tax advisor, financial planner, and/or attorney before making investment decisions. Having said all that, all you need to do to learn more is go to homeinvest.com or click in the description below.
Welcome back to Purpose Driven Passive Profits. His name is Nate Armstrong. He is the CEO of Home Invest. My name is Steve Warner, and I am the Chief Investment Officer. And we are here for the people that are looking to be good stewards of their money, of their hard work and their efforts, and see that multiply. Today, we are going to be talking about, do you invest in a single property syndication or should you invest in a fund? Now, to be really honest, these are both out there. You'll hear them both, and there are pluses and minuses to both. And we want to make sure that you put your money in a place where it is going to work really, really well for you. So that's what we're going to be talking about today. Nate, tell us, just as a high-level overview, what's the difference between a single family property, let's say maybe 20 units, 50 units, 60 units, and a fund style investment? Just give us the broad overview and we'll dive into it from there.
Yeah. So a syndication, that's kind of like what Steve, you just mentioned, as a single family or single property kind of entity. That's typically used for something that's like just a one-time project that people are going to come in, they're going to buy it together as an ownership group. They're going to fix it, they're going to rent it out, and then they're probably going to sell it at some point in the future. Usually the syndication model is commonplace for that. And so it's very, very popular. We'll go through pros and cons in just a little bit here, but that's kind of what syndication is, a single property in mind. It could be a business too. It could be other assets, but we're talking about real estate here. So think single assets. And then a fund would be more like a multi-asset vehicle. So we'll talk pros and cons in a little bit, but a fund could have 3 properties. It could have 30 properties. We helped a gentleman with his fund. We were the largest provider for all of his sourcing and all of his renovations and all of his leasing for about 2 years straight. And I bet you we helped him with 200 assets over a course of a couple of years in that fund. So a fund could be really any size depending on the amount of capital it's raised.
Okay, awesome. So let's jump into, first off, let's say if you do a single building syndication, it usually has a start and a stop. It has a fixed amount of capital. What are some of the pros, and how does that, like, let's put that against doing a fund and see what the difference is.
Yeah. So the biggest pro to a single syndication is this. You know exactly, like if you're an investor and you're looking into this, and by the way, like Steve and I want you to know this, not just for deals with us, but also for any deals that you look at out in the marketplace. Like, know whether it's a fund, know whether it's a syndication. So the biggest benefit to a syndication is that because it's only one asset, you know where the money is being invested. You can physically drive by it. You can go look at it. You can touch it. You can feel it, all that kind of stuff. So for some people, that gives them a lot of peace of mind knowing that that's that single asset.
Okay. So single asset, how long does it take usually to, one, fill the fund, and how fast will people start to see fruits of their money working for them inside of a fund?
Yeah. Fund or syndication, just so I make sure I'm clear.
Syndication, sorry.
Okay. So syndication, usually, like, we just had an offering 2 weeks ago and we filled it the first 6 days that we put it out. So syndications, because it's only a single asset, they tend to fill up really, really fast. The fun stuff that we've done in the past usually fills up fast as well, but that's different subject, different time. So how long does it take? It depends on how many investors are kind of circling around the folks that are putting them together. We've got a lot of people around us, so therefore, like, ours tend to fill up pretty fast. Now, how long does it take to actually make money on a syndication project? Remember, this is that single asset. So usually properties need some kind of, like, for the syndicator, the group that's buying it, for them to make a profit, usually they have to do some kind of improvements to the property and then start to monetize that either through rents or by selling the building. And because that they have to do something to it, usually there's time that it takes. So on the very fast end, I would say that you could start getting rental distributions 3 months later. That's very fast. And then your big profit check usually takes about 5 years on syndication deals.
Okay. And how does that compare against funds?
Yeah.
Funds, you're putting multiple properties in. Go ahead, walk us through it.
Yeah. So on a fund, my every fund is different. Some funds are going out and they're building stuff from the ground up. We don't do that here. We stick with good, stable assets already. So typically our funds, they're usually producing money right from the get-go. We don't have to do, because it's diversified over several properties. It's not just one asset that we're waiting to raise the rents on, or we're waiting to do a renovation to. Usually there's several assets in a fund, and at least a percentage of the portfolio is going to be stabilized, income producing. And that income is then used to then turn around and either pay out distributions or have money that's growing for people when it's time to sell or when it's time to exit the fund.
Awesome. So that's, I think, the one big thing. If you want your money to go in right away and start to go to work, a fund is going to be for you. One of the other things that I want to talk about, fund has multiple properties in it. And we talked about diversification. The thing with a fund, people who put together good funds, they usually follow a thesis, which is we're going to invest in storage units in this area, or we're going to invest in small to mid-sized multifamily in this city. We're looking specifically for Class B properties or Class A properties. So what this does, instead of just being one property, if you have 4 properties that fit the general thesis, one might do slightly above average, one might do slightly below average, but as a general, it gives you a diversified portfolio all around the same thesis and will smooth out any bumps that you have. Whereas if you have a single property fund, you could end up with a property that, maybe it doesn't do quite as well as expected, or maybe it takes a little bit longer to hold. In a fund, you're going to get a solid, stable return from beginning to end. Am I understanding that correctly?
Yeah, Steve, spot on. Specifically with funds, kind of like the ones that we do, or folks that are doing similar to what we're doing. Because some, like the funds that we do, they're going after, our thesis, as you called it, is going after properties that haven't had the rents raised in the last couple of years. Just the usually owners that are absentee, maybe they're getting near retirement age and they just haven't put the same love or passion into the property, but they're already income producing. They're not like, this destitute vacant building that was in foreclosure. That's not our thesis. So our funds do exactly what you just said. Like they're already income producing right from the get-go. Therefore, when an investor puts money into our fund, their capital is growing right from the beginning.
Okay, perfect. So last question, is there one clear winner between a fund and a single building syndication, or what would be the pluses and minuses that you see?
Yeah, that's a good question, Steve. I've got my personal bias, but I won't stamp that out there for everybody yet. So let me explain this first. The other plus to a fund is diversification. You were mentioning that, and it's kind of been weaving into this conversation, but I just want to really point it out. The plus to a syndication, that's a single property, is that you know exactly where the money is. It's in that specific property. The plus to a fund is that you're diversified. I like whoever is going out and talking with their financial planner, I'm sure you've heard the word diversification. Well, that's what a fund does. It just does the diversification for you in multiple pieces of real estate, multiple assets. And so like if you had to push me towards one or the other, I would pick a fund for that reason. There's one other reason too, and it's that the overhead cost to operate a fund is less in many cases than it is of a syndication. A syndication takes the same amount of legal work as a fund. A syndication takes the same amount of accounting upfront and set up by the team as does a fund. And the fund has more efficiencies because generally it's larger. Anytime you're starting to get that economies of scale and you can have more volume behind it, typically it makes the cost of administration and overhead go down. So theoretically, when you see that, is that your money invested into a fund should get a better output. It should be able to produce more because there's less going towards overhead.
All right. That is a very good key takeaway. Is there anything like, so would you say fund? Would you say single
Y-
family or single family,
Yeah.
single building?
So it depends on the goals of the individual. All of it's going to come back to that. But if it were me and my money, I would do fund. But if the goals of an individual are like, oh no, I need to touch and feel the single asset, then syndication. Or another example is we get a lot of people that come to us that are doing larger 1031 exchanges. And so for those folks, a lot of times a syndication makes the most sense for them if they're doing a 1031 exchange, simply because there's rules around what a 1031 exchange person can invest into and can't invest into. And oftentimes syndications line up better for them.
Okay, got it. Last but not least, if you guys find this interesting, we do have both funds and single property available. You can go to homeinvest.com to learn about our current offerings. That will be linked down below as well. Nate, do you want to talk about the single family that we just closed up? This one it is fully subscribed. We do have a short wait list, but let's go through it just in case they're interested.
Yeah. So the syndication that we just got done doing, a 22 unit building, and that particular property, we put it out a week and a half ago or so, and it filled up right away, but is in a historic district of Louisville, Kentucky, about 3 blocks from another asset that we own that we're just dominating on right now with all of our leasing numbers, all of our occupancy, things like that. And so this property coming available totally off market. It was an awesome score. We normally don't take them this small, that 22 unit, but because it was in such a nice neighborhood and it was 3 blocks away from our other asset, it made total sense to grab it. So we grabbed it. We're closing on it here in just, 4 weeks or so. And then that one will do the same thing that we do to all of them. We'll increase the rents on it. We'll improve the place and we'll get it to maximum efficiency. And then we'll turn around and resell it to make a profit for our investors.
Awesome. Well, you guys heard it here. You heard the differences. And if you are interested in learning more, go to homeinvest.com or click down in the description below. And we'll see you next time here on Purpose-Driven Passive Profits.
Bye, guys.
Thanks so much for listening to our show today. Here's Nate with our latest offering.
Oh, so I'm excited to announce this. We've got a 78 unit building, multifamily property. It's 5 minutes from the Kentucky Derby. Its rents are presently 20% below market for renovated units. To learn more, all you need to do is go to homeinvest.com or click in the description below.